Investors should always adopt a long-term mindset, but the future might not resemble the past. What if I told you that the next decade could redefine how we perceive wealth and financial opportunity? We're diving into the captivating world of stocks, exploring what lies ahead in the next 10 years. From groundbreaking technologies to global economic shifts, join me as we uncover the future of stocks. What to expect in the next 10 years. The stock market is like a bustling marketplace where people buy and sell ownership in companies. Imagine it as a place where you can own a tiny piece of your favorite brands or innovative companies you believe in. What makes this market tick? It's influenced by a mix of factors, from how well companies are performing financially, like their profits and sales, to broader economic trends, think employment rates and interest rates, and even investor sentiment, how confident or nervous people feel about the future. These elements blend together in a dynamic dance, shaping whether prices rise, fall, or stay steady. So, whether you're a seasoned investor or just starting out, understanding these shifts can help you navigate this exciting and ever-changing financial world. In contemplating the future of stocks over the next decade, one must embrace a forward-thinking perspective, acknowledging that past performance does not necessarily predict future outcomes. The S&P 500 and NASDAQ composite indices have recently soared to unprecedented heights, fueled by a wave of investor confidence and bullish momentum. Investors historically treasure the stock market for its unrivaled potential to build wealth over time. Consider the staggering gains. Over the past decade alone, factoring in dividends, the S&P 500 has surged by an astounding 328%, while the NASDAQ composite has notched an impressive 237% rise. These figures underscore the market's capacity to deliver substantial returns. Yet, as we stand at this juncture of historic highs and unprecedented optimism, the question beckons: is now the opportune moment to embark on a 10-year investment journey in stocks? History suggests compelling potential awaits those who venture forth. It's all about valuation. In the realm of financial foresight, Vanguard, a titan with decades of experience managing trillions, unveils its predictive powerhouse, the Vanguard Capital Markets Model. This sophisticated tool dives deep into historical trends to unveil the future of stocks over the next decade. According to Vanguard's projections, the landscape ahead appears subdued, with U.S. equities anticipated to yield a modest 4.7% annually. This forecast marks a significant deceleration compared to previous years, hinting at a shift in market dynamics. The reasoning behind Vanguard's tempered outlook boils down to valuation fundamentals. As investors seek stocks at lower price points relative to their earnings potential, the stage is set for potential upside. As markets evolve, so do strategies. Vanguard's model isn't just predicting returns, it's decoding the DNA of market behavior, offering a roadmap for savvy investors. In this era of evolving financial landscapes, Vanguard's insights offer a compelling narrative of cautious optimism, where every valuation tells a story of potential gains and strategic positioning in the years to come. In the dynamic world of stock markets, the S&P 500 CAPE ratio serves as a revealing gauge of market valuation. Currently standing at 34, it marks a 36% increase from a decade ago and a staggering 63% leap from 30 years back. This upward trajectory in valuations underscores a significant trend over recent decades. The driving force behind these soaring valuations can be traced back to declining interest rates since the 1980s. As yields on traditional fixed income investments dwindle, investors increasingly turn to equities in pursuit of higher returns. This shift in capital allocation continues to propel stock market valuations to new heights. With interest rates playing a pivotal role in steering investor decisions, every fluctuation becomes a narrative of risk and reward. As we look ahead, the prospect of Federal Reserve actions adds an element of suspense, hinting at potential twists in the plot of market dynamics. Looking ahead, the Federal Reserve's potential rate cuts in the coming years could further fuel this expansion. As investors anticipate the implications of such monetary policy moves, the stage is set for an exhilarating decade of potential growth and market evolution. In recent times, the stock market has been electrified by a wave of cutting-edge tech companies, often referred to as the Magnificent Seven, whose meteoric rise has reshaped investment landscapes. These trailblazing firms achieved an astounding average return of 111% in 2023 alone, pushing the boundaries of traditional valuation metrics with their premium P/E ratios. Remarkably, despite constituting less than 30% of the S&P 500, their influence on the index's overall valuation is undeniable. For savvy investors seeking opportunities beyond the mainstream, the key lies in uncovering hidden gems untouched by the frenzied A-driven surge that has inflated many stock prices. These overlooked companies could hold the untapped potential to outperform the broader market in the coming decade. These companies aren't just making waves, they're setting records with eye-popping returns that defy market norms. Their impact on the S&P 500 is significant, subtly shifting the entire landscape of stock valuations. What's even more fascinating is the undercurrent of opportunity beyond these headline-grabbing giants. Picture discovering lesser-known gems untouched by the frenzy of AI hype, poised to surprise even the most seasoned investors. These hidden treasures hold the promise of outperforming expectations, offering a unique path to success in the dynamic world of finance. Don't be discouraged. In the ever-evolving world of stocks, predicting the future is a challenge akin to navigating uncharted waters. Even renowned experts at firms like Vanguard find themselves humbled by its unpredictability. Yet, amidst this uncertainty lies a fascinating landscape to explore. Today's market realities urge us to reconsider our expectations. Can we continue to chase soaring valuations and anticipate perpetual gains? The answer may lie in the unfolding of time itself. The future of stocks beckons with intrigue and possibility. It's a realm where past wisdom meets future innovation, promising both cautionary tales and potential triumphs. As we gaze ahead, we await the unfolding narrative, ready to decipher its mysteries and embrace its revelations. Investing in today's uncertain market can seem daunting, especially for those starting their investment journey. Questions about whether it's the right time to commit funds linger, particularly when future returns appear uncertain. However, let's debunk the common misconception: there's never a bad time to enter the stock market. Research consistently shows that trying to predict market dips is a risky endeavor. Instead, a prudent approach involves regular investments over time, known as dollar-cost averaging. This strategy, coupled with a long-term perspective, has historically rewarded patient investors. So while the future of stocks may seem uncertain, steadfast investing remains a proven path to financial growth and stability. So what's the opportunity? Looking ahead to the next decade, the landscape for stocks presents a compelling opportunity. Recent adjustments in the P/E ratios have significantly enhanced the attractiveness of stocks compared to earlier this year. Despite this, current margins are near their peak and valuations remain higher than historical averages, suggesting that relying solely on the S&P 500 for robust double-digit returns may no longer be realistic. To achieve substantial gains, investors may need to embrace greater risk. This could involve pinpointing stocks poised to benefit from enhanced sales growth, expanded profit margins, and more favorable valuations. Alternatively, strategic timing of market entries and exits could prove advantageous. Exploring smaller U.S. companies focused on value, as well as opportunities in emerging markets or European stocks, could unveil promising prospects. Regardless of your chosen strategy, adopting this framework can prove invaluable. By rigorously testing assumptions and deepening your understanding of the core drivers of stock performance, you'll gain a solid foundation for crafting well-informed forecasts. This approach transcends traditional guesswork, positioning you for a future where investment decisions are driven by clarity and strategic insight. As we navigate the dynamic landscape of the stock market over the next decade, one thing is certain: opportunity awaits those who stay informed and invested for the long haul. Whether you're just starting out or a seasoned investor, understanding these future trends will be key to unlocking financial success. Remember, investing with foresight and patience is key to achieving financial goals amidst market fluctuations. If you found this exploration insightful, don't forget to like this video and subscribe to our channel for more in-depth analyses and expert insights on financial trends. Stay tuned, stay informed, and let's navigate the future of stocks together. Happy investing!